Welcome back to our weekly market insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. Let's get to it because we have a lot of news for you today. Markets have mostly remained steady this week as investors assess cooling inflation data and the de-escalation of trade tensions. U.S. stocks started the week with strong gains in response to the temporary suspension of tariffs between the U.S. and China. Meanwhile, treasuries partially rebounded from earlier losses following a batch of favorable economic reports. The U.S. and China will temporarily lower tariffs on each other's products in a dramatic de-escalation of the trade conflict between the world's two largest economies. U.S. Treasury Secretary Scott Bessent said on Monday that talks with China had been very productive and announced that the countries had reached an agreement, which resulted in a 90-day pause on the bulk of tariffs between the two trade partners. Reciprocal tariffs will be cut by 115% during the span, bringing U.S. tariffs on Chinese goods down to 30% and Chinese tariffs on U.S. imports to 10%. U.S. inflation rose less than forecast in April. The Bureau of Labor Statistics Consumer Price Index rose by 0.2% for the month, putting the 12-month inflation rate at 2.3%, the lowest since February 2021. Economists expected that the CPI would rise 0.3% from March and inflation to remain at 2.4% on an annual basis. Core CPI also increased by 0.2% for the month while rising by 2.8% compared to April 2024, unchanged from the prior reading. The forecast was for 0.3% and 2.8% respectively. Shelter costs were a key driver, rising 0.3% in April and accounting for more than half of the overall increase. The Producer Price Index recorded a surprising downturn in April. PPI declined by 0.5% following a flat reading in March, highlighting a potential downward trend in producer prices. The median forecast called for a 0.2% gain. The negative figure may suggest easing inflationary pressures at the consumer level. PPI rose by 2.4% on a yearly basis. Core PPI declined by 0.4% from March while rising by 3.1% annually. Sentiment among U.S. small businesses deteriorated for the fourth consecutive month in April. The National Federation of Independent Business Optimism Index declined by 1.6 points in April to 95.8. It was the weakest reading since October and the second consecutive month below the 51-year average of 98. Of the 10 index components, expectations for business conditions and unfilled job openings were the largest drags. The survey found that 34% of business owners reported job openings they could not fill during the month, down 6 points from March. The last time job openings were below this level was in January 2021. Meanwhile, the share of businesses expecting better conditions dropped to a net 15%, and sales expectations turned negative for the fourth month in a row at negative 1%. Consumers spent slightly more at retail stores last month after ramping up their shopping in March to get ahead of tariffs. Retail sales rose 0.1% in April, reflecting consumers' spending pullback during the month. That followed a revised 1.7% gain in March, which was the largest in 2 years, after a surge in car sales as consumers sought to get ahead of the 25% duty on auto imports. Builder confidence fell sharply in May on growing uncertainties stemming from elevated interest rates, tariff concerns, building material cost uncertainty, and the cloudy economic outlook. The National Association of Home Builders Housing Market Index fell to 34 this month, down 6 points from April. The index was below the reading of 45 a year earlier and was the lowest since the same reading in November 2023. However, the NAHB noted that about 90% of survey responses were collected before the May 12th U.S. China tariff reduction agreement. MBA mortgage applications climbed for the second week in a row after rising by 1.1% for the week ending on May 9th. New purchase applications rose by 2% week to week and were 18% higher annually. Refinancing contracts slipped by 0.4% from the previous week, but were still 44% higher than the same week in 2024. Mortgage rates remained relatively steady, with only a small 2 basis point increase in the 30-year conforming rate to 6.86%. Applications for jobless benefits were unchanged from last week. The number of Americans applying for unemployment aid held steady at 229,000 for the week ending on May 10th, in line with consensus expectations. Initial claims have moved in a 205,000 to 243,000 range this year, consistent with the historically low level of layoffs. Continuing claims increased by 9,000 to 1.88 million during the week ending on May 3rd. That is it for the week, everybody. As always, stay locked in so you are current on market news. Also, if you like this video, please hit that like button, share, and of course, subscribe. Hit that notification bell so you know when we upload a new video. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Have a great weekend, everyone. Buffy out.